Hello, my name's Michele Green, and I'm Senior Vice President of FNF's National Agency Operations. I'm here today to talk with you about the latest evolution in wire fraud, the seller impersonation fraud. The infiltration of international organized crime into the real estate and settlement industry is at its highest level ever. As wire fraud has evolved over the last decade, can you believe it's been a decade? Wire fraud has seen a relatively clear path of evolution. Did you realize that nearly every aspect of the buying and selling and ownership and title to real estate has become freely available online? MLS listings and updates, land records, city and county tax records, virtually everything is visible for free to anyone on the planet who wants to look at it. And the criminals sure did watch and learn how our industry works. They figured out quickly that our industry moves around a lot of money and information that's very valuable on the dark web. What started out those 10 years ago as watching ordinary transactions every day, just watching and waiting for the right moment to send an email to misdirect seller proceeds, and that wire fraud, it evolved to waiting for just the right moment to send an email to a consumer to misdirect their cash flows. Then the fraudsters evolved into altering mortgage payoff statements. You guys all know about this, and misdirecting entire mortgage payoffs. And the stakes got very high for our agents. There have been many whose businesses didn't survive these losses, but the outcomes overall, when losses are as large as they are, and the ability to fully insure against this risk has completely disappeared from the market. The latest evolution of wire fraud, the seller impersonation scams that are all over the news, Alta Communications, Underwriting Communications, these so-called vacant land scams. If they can't steal from the flood of transactions that our industry has seen for its past few years, where the market was very high, there just aren't enough of them to steal from anymore. So they just decided to force transactions into our market, force properties to sale without the actual owner participating. And then they steal the seller's proceeds wire. Yes, seller impersonation scams are wire frauds. The scam's intended payoff isn't the forgery, it's the seller's wire at the end. And importantly, why do I want to be clear that this is a wire fraud claim? Because as we know, all E&O policies at this day and age have exclusions in them when the loss arises or is any way related to a wire fraud. So we're really operating without a net, no insurance to cover these losses when they happen. So let's take a closer look at this. Transactions will come to your office often in the ordinary course. This is how we find out what a seller impersonation scam looks like. Perhaps a broker on the seller side or a broker on the buyer side will tell you that they've got a client who's got a property under contract. Your title search will almost always indicate that the property's free and clear of any mortgage, perhaps long held by the same owner. Your municipal record search will also most often indicate that the property is vacant or otherwise not occupied by its owner, such as a vacation home or an investment property. The tax mailing address for the property will usually not be the property. Your business source will then tell you that the buyer is going to be paying cash and that the seller wishes to close as soon as possible. This will look like the easiest transaction ever. Now, often, but not always, the sales price for your transaction will be below the market, substantially below the market value or even the tax assessed value. And finally, in most every case, the seller will not be signing the seller deed in your office. They will not conduct a RON. They will not be visited by an approved mobile notary. They will not visit a local FNF office to get their deed notarized. They'll just say, I'll take care of it with my own bank or my own attorney or whatever. This is a mail away closing for you in almost every case, with all the other docs probably being DocuSigned. And when you receive the documents back, you'll send them to record and you'll disperse the seller's proceeds to the seller according to the instructions that you've been given, and the deal is done. At some point in the future, maybe when you send a 1099 to the seller, or the seller goes to pay their own real estate taxes and realize they don't own the property anymore, or in a large number of pretty spectacular cases you might have seen on the news, after a huge and expensive home has been constructed on what was vacant property, you're going to learn that the seller you worked with and wired the money to was not the actual owner of the property, but a person pretending to be that person. This is when you realize that you've insured title into a party that has no title whatsoever, and there is a complete failure of title under any policy issued. And remember, your office has no insurance for this travesty. First and foremost, how do we avoid falling victim? Again, first and foremost is to recognize when you're dealing with a high risk transaction. All those factors I just described. When the property is not occupied by the owner, it's either vacant or investment property or a vacation home, but vacant is the most common. Then there's no seller's mortgage, the buyer's paying cash, and then the question is of how the purported seller is going to sign the seller's deed. These are the red flags. When these factors are all present, you are dealing with a high risk transaction. As we sit here in the fall of 2023, when those factors are present, it's always high risk. Then you must be very, very careful at that point to make sure that you comply with all of the FNF document execution requirements, like controlling the notarization of the seller's deed. At the very least, you must make every available attempt to confirm that you're dealing with the real owner of the property or not. You can do this by actually contacting the real owner or disproving that the person you're dealing with is the real owner. What do I mean? Well, you can contact the real owner by finding an independent source for an email or a phone number and call them or contact them. You can send them a letter at their tax mailing address. These types of protocols have avoided hundreds of frauds. The way you confirm that you're dealing with the real owner of the property is to actually contact the real owner of the property by an independent means, not anything that you've been given as part of this transaction. Additionally, you can disprove anything that the purported seller has given you or is trying to tell you. You can closely examine the identity documents that they've provided. Does it even look valid by the state's requirements that driver's license or what have you that the seller has provided to you? Those are easily Googleable, what a real driver's license in a particular state is supposed to look like. Maybe find a picture online, whether it's social media or otherwise, of the real owner and look at it versus the copy of the ID that comes back to you from the purported seller. Find a real signature of the owner of the property through online property records and compare it to the deed that comes back to you. Ask maybe the purported seller for a copy of the canceled check from their most recent real estate tax payment, or a copy of their title policy or closing disclosure from when they purchased the property. Get them on the phone. How about a FaceTime? But be careful about the evolution of artificial intelligence and chat GPT. The fraudsters are getting better and better at that every day. Tell the seller, by the way, that you're a certified customer and see how they react. It's kind of like putting the ADT sign out in front of your house. A fraudster knows they won't be able to pass the processes of a third-party identity validation company like Certified, and often they'll just disappear if you even just tell them that you're a customer of a company like Certified. And vitally, in every sale transaction, double down on all of your protocols about how to confirm that you're receiving seller wiring instructions from the real owner of the property, particularly in these high-risk transactions. There's no loss that can't be fixed, even if everything about the forgery aspect misses your notice or the notice of your employees. The loss doesn't happen until you send that seller's wire. The same way that you would call to a known safe phone number for all outgoing wires, use them here, but recall that you have never been dealing with the real life owner of the property. So the independently obtained phone number must be truly independent of this file. Our agents are being sued all across the country when these transactions are closed and then discovered. Even when a title policy is issued for the purchase of vacant land, consider additional liability that will ensue if perhaps a house gets constructed onto the property. Who's going to be responsible for those costs? If a transaction gets closed and then later has to come apart? What if this buyer investor, as many investors do who are paying cash, choose not even to purchase title insurance? Where is all of that liability going to land? What about liability to the seller whose property has been stolen from them? Again, our agents are getting sued all across the country when these transactions get closed. And remember, as I said at the beginning, E&O carriers are treating these losses as wire frauds and they're denying coverage. So remember that the very livelihood of your business might depend on your ability to avoid closing these fraudulent transactions. Um, there's a great Alta piece on seller impersonation fraud, how to spot it and how to avoid it. So please take a look at that. And beyond that, thank you as always for your time and attention today and for trusting FNF with your business. Take care.